All right, so I welcome you all to question solving for consolidation. We will solve 3 flood questions. This is the very first one. And a gentle reminder that if you have not gone through our lecture videos on consolidation basics, try as much as possible to go through or to do that, to be on server side. All right, so let's go. First question we are going to discuss is called Paladin. When they give you a question, do not bother yourself to read a story. Consolidation is very easy. First, read the requirements. It said prepare consolidated financial position for Paladin as at 30th September 2011. So, under examination condition, this is what I expect everybody to do. Right after the requirement like this, go to your answer booklet. Consolidation is always your question 1. So right on top, question 1. It's only one question per. So write the name of the parent. Say Paladin Group. Write your statement. Add console to it. If you don't make console, you are Edo. Some school of thought believe that once there's a group here, we should mark when you say statement, but some also of the view that it is not right. So please, to avoid any issue with any examiner, just bring it. Write it boldly, consolidated. Consolidated statements of financial statement of no, for the asset of what am I writing? Financial position. As at as at 30th September. Please, if we are reporting at 30th September 2011, what do you think will be the beginning of this reporting year? The beginning of the financial year automatically will be the next day of the previous year. The next day will be 1st October 2010. Check the reporting currency very well before you continue. What's the reporting currency here? It's Ghana cedis in 3 zeros. So as you have to do it in exams. That is all. Then you leave enough space, ideally for financial position, the entire first page will be enough for you. So move on to the next page. Then you still write your question 1 on top. But this time I say workings. Open a bracket and say all figures are in Ghana city in thousands. Close it. This is a comprehensive insurance. This is a comprehensive insurance. And then we are good to go. Oh. Today. Now, once you are doing console, your first thing you have to do is establish your workings 1. Whether you are doing balance sheets or you are doing console P&L or comprehensive income, your first working should be workings 1A, the group structure. I normally want the table version. So we are going to go to the question and read the group structure aspect of the question. And we complete the group structure. That is what we can do to make things look okay for us. All right, so that is that. So let's all move straight to the question. Read. If you want to get a group structure side, you can read the top side here. You get everything. Is it on October 1st, 2010? October 1st, 2010, that's a full year. That's good. Paladin secured a majority equity shareholding in Saracen on the following terms: an immediate payment of 4 Ghana cedis per share. And then, but they didn't tell us how much Paladin acquired. You see, those other stories, we don't need them. We need how much Paladin acquired in Saracen. That is what you must know. I've updated it. It should be at the top there. All right, too. All right, so here, they only said that Paladin secured a majority shareholding. As to the percentage Paladin acquired, the examiner did not make it known to us. So we have to hunt for it. I've just seen it. If I've also seen it, show it to me. What is the percentage holding? They only told us, or the informers, the consideration paid, Paladin paid. The immediate payment has been recorded in Paladin's financial statement, but the deferred payment has not been recorded. The cost of capital is 8%. So here, what you have to do is this. You see, look at the investment. Saracen, 8 million shares at what? At 4 cedis. So that is where we can get the number of shares parents acquired. How many shares here?
8 million shares.
Good. So you have to look for the number of shares Saracen has so that we can now find the percentage holding. Go to the equity side. How many shares do you think Saracen has so that we can do the...
Sir, please, he has 10,000 shares.
Good. So that will be 10 million. And out of
Yes.
parents acquired, Paladin acquired
8 million.
Good. So
8 over 10 times. 8 over 10 times.
write the parents' name here.
Sir, please, it's 10%. 80%, sorry.
That's correct. Open a bracket. 8 divided by 10, 8 million divided by 10 million times 100. And right here, Saracen, 80%. Again, there was another company, Augusta. Augusta Band. Okay, so it says that on 1st February 2011, Paladin also acquired 25% equity shares of Augusta, paying 10 million. What we want is the 25%. In that case, Augusta becomes what? Write your Augusta. In that case, Augusta becomes what?
An associate.
So that's all right here, NCI. 20% dash. That's the first thing you have to do. You don't need to go and say, I'm going to solve the question. No. So this is how I want you to arrange your answers for us. Then the second aspect is effective date of acquisition. Effective date of what? Acquisition. When was that? Let's go back to the question. It said on October 1st, 2010. So October 1st, 2010 is the effective date of acquisition. So all what you have to do is to just write 1st October 2010. The next working is C. Call it period of consolidation. We call it period.
Can you go ask more for me to see something?
Now, for Augusta, you can, this is for Saracen. So for Augusta, let's check Augusta's date that the parents acquired. 1st February 2011. Augusta's own is 1st February. Then let's do the period of consolidation for Saracen. Please, what will be the period of consolidation? We acquired 1st October 2010 up to September 2011. That becomes a full year, right?
January, February, March, April, May, June, July, August, September. Yes, it's 12 months, 1 year.
Yeah, so third examiner, full year or 1 year consolidation. If it is 6 years, write 6 years. Balance sheet, we consolidate from the start to the end. So for balance sheet, you can have, let's say, 2 years and 6 months, 5 years. But for P&L, either you get a full year or below. Take notice. Balance sheet is not like that. Now, but for Augusta, please, from February 2011 up to September 2011, how many months? First February 2011 to 30th September, the same 2011. How many years, how many months, how many weeks, how many days?
Sir, please, 8 months.
All right, so you agree or don't agree?
I agree, sir.
Okay, so that is it.
Yeah, well. However,
All right, so once
hello,
we
sir.
confirm that it is 8 months, we are good to go.
Hello, sir.
Yes, please.
Sir, I want to inquire for the period of consolidation.
Yes, please.
If you write full year or 1 year, it's correct. Can we also state that? Can we also state the period that is from 1st February 2021, 2011 to 30th September 2011? Would that be acceptable?
Yes, it's also acceptable.
Okay.
Yes, it's all right. Because that was what we did to deduce the 1 year and a full year from it.
Okay.
All right, so for Augusta, it told the examiner that Augusta is 8 months, starting from February, second month. Don't fish out to count fingernails in the exam, so if you want to count, you count. Nice. February, March, April, May, June, July, August, September. So we count 1, 2, 3, 4, 5, 6, 7, 8. Good. If you do this, it will give you a sure answer, a certain answer. After the paper, all those who do otherwise, you'll be fine. So 8 months. 8-month associate. It's an associate, so clear. However, some people also use diagram. So alternative to the group structure workings, one alternative. Some will say group structure. They write a padding here. Write Salafin here. It's Arson here. They put the 80%, they do the calculation. 8/10 times 100. 80% NTI. 20% on 1st of October 2010. Then either you do here, you go here, or you go here. Anyone, okay. But let's go to the other side. Then they will put Augusta here. Then they write 25%. They put the date 1st February 2011. Then Saracen period of consolidation, full year consolidation. Yes, 8 months. So which one do you like? Diagram or table?
Table is fine.
All right, so that is it.
Okay.
Yes, boss.
Okay. Please, can you let me look at the table again?
Okay. This is the table. We have A, B, and C.
So let me the B part, C part.
Augusta, 8 months. Associate.
I think the table is okay.
Okay, so that is that. Okay, so next show has to do with, now that we've established that we are going to do full year consolidation for Saracen, you go ahead and do your consolidation, that's all. But don't forget to leave a space for goodwill in your non-current assets. So go to your statement of financial position and consolidate. Parent plus subsidiary. Parent, Paladin's own plus Saracen's own, and then we are good to go. So when you move the road assets. Mostly in exams, I don't repeat the asset deal. I start from non-current assets because I'm always running late or finding a way to present to look like what they have. So instead of me starting from saying assets, I'll go straight and say non-current assets. You'll never be penalized for that. You see, once there's goodwill in a question, you have established that there's goodwill in a question. You have goodwill here. Even if there's no goodwill, especially if it become negative, you still write it here and put dash there. Then there's other items you can decide to bring. Mostly here there's associates, so not to forget about it, you bring associates, but you call it investment in associates. Investment in associates. Into bracket Augusta. We'll do the calculation. Then you now go and start what they have there. Please, you can also decide to bring this stuff last. It doesn't matter. When they move, you move. Next item is called PPE. Parent plus subsidiary. 40 plus 31. So let's go to PPE. No shortcut in exams. Open the bracket, say 40,000 plus 31. Don't close the bracket, still continue. Then intangible assets. It's only parents, 7,005. Please, if you see investments, and if you mention any of the subsidiary or the associate, we don't consolidate such investment. But where they've not mentioned their names, you must consolidate them. If the names are not mentioned, they only say investments, we need to consolidate and later eliminate the consideration paid by parent. All right, so that is that. So here we'll not consolidate all the investments here because it's not, they've mentioned the names. So go straight to current assets. If you like, can leave enough space because maybe something will pop up again. Did they added their non-current asset? They did. So you must also do the same thing. And likewise, right here, current assets. They started from inventory, must also start from there. Inventory is 11,200 plus 8,004. 11,000 inventory. Oh. Inventory is 11,200, 8,004, 11,200, 8,004. Then you go again. From there, where do we go to? Trade receivable. Trade receivable, that will be 7,400 plus 5,300. 7,453. 7,453. Leave it. Bank. Bank is for only parents. Okay, parent and then Augusta. We only pick parents. All right, so I'm done. Then they move on to total assets. You must also get total assets. Bank only write the parent own. So let's go to equity and liabilities. Equity shares. Equity to pick all of the parents. We don't pick equity of the subsidiary, neither the associate two. Let's go to equity. After our total assets. Oh, under to pick the bank figure out. It's free.
$3,400.
Okay, so that's 3,004. Good. So he said it's 3,400. 3,400. So open it and leave it. Then he gets what you call total assets. Next. Under the equity, you only write equity shares and the retained earnings. So under equity, you need so equity should be all right. So equity here is stated capital. Equity shares is 50,000 for the parents. Don't put your answer there. Oh. They call it equity shares. So right here, equity shares. Equity shares should be here. Open a bracket and say 50,000. Don't close it. Write your group retained earnings or group reserves. Yeah, we'll do workings. After adding the two together, the answer that you get, you come and add NCI. Hey, please, I hope you've copied the first workings you've done. I hope everybody have it.
Yes, sir.
So we are through. So let me clean this side. When you go here, from equity, where do you go to? So next item on the list is non-current liability, deferred tax. Write a non-current liability. Or something that which was the non-current liability as deferred tax group. All right, so please what's the deferred tax figure? Those who have the question, open the brackets.
Yes, so everybody must use the mushroom to prepare a food. Mushroom can be.
All right, so the deferred tax figure, let's go and pick it from the question.
15,000.
15 plus 8,000, right?
8,000. Yes, please.
You said 15,000 plus what?
8,000.
Let's go.
Sir,
All right, so let's see the game. If you have a question, you ask.
sir, please, I have a question.
Okay, kindly ask.
So please, when you get to the equity, you record everything
Yeah,
under equity, like for the parents equity, everything.
everything. But when you get to the retained earnings side, call it
Mhm.
retained earnings.
Then I call it group retained earnings. Then I'll add the NCI.
Make sure that you add the equity before the NCI, then you now add NCI to it and get a figure. Like we have.
Oh, okay. Okay.
If you add a NCI directly to equity, it's unacceptable presentation.
Okay, sir. Okay, sir. Thank you.
Great. So here the deferred tax 15,800. So please you add it to which you go. Next, current liabilities.
Bank.
Bank and trade.
2,000.
Okay, so you open a brackets. Yeah, what do you do?
Sir, please, you take 2,500.
So 2,500 here. This is what you do. But some people will not do this. And they rather focusing on the complicated theories. No, please. We have our steps. We need trade payable 11,600 to 6,200. Trade payable 11,000. I don't think Conso should be problematic in exams. 11,600, 6,002. I don't think Conso should be a big deal. Conso is far nicer than preparation of single financial statements. That's IS1. So now note we are done. And when we are done like this, you see, we are now workings 1. We are done with the group structure. Go to workings 2. Cost of consideration. So once you are doing financial position, this should be your workings 2. Cost of consideration. It should be your workings 2. Now, what goes into cost of consideration? Here, you go straight to the acquisition story at the top here. It says that on October 2010, Paladin secured a majority shareholding in Saracen. On the following terms, number 1, an immediate payment of 4 Ghana cedis per share. So how many shares acquired?
Sir, please, 8 million shares.
So the 8 million shares multiplying by 4 cedis, right?
Yes, please.
So call it cash. $8 million or 8,000 times 4 cedis. Because we have raised 3 zeros. 8 4.
32.
So that will be 32,000 cash consideration. That's all. Next, a further amount deferred until 2011. 5,400. We call deferred consideration. Now the cost of capital is 8%. So here you find present value. When are they paying? It will be
No
deferred
pain.
until when?
1st October 2011.
So how many years from the date of acquisition?
Sir, please, 1 year.
Good. So you have to find the present value of a deferred consideration. So right here, deferred consideration. I charge you to watch the video on deferred consideration and a contingent consideration. What is the practical difference between them? Open your brackets. It will be 5,400 on top, all over 1 plus 0.08 to the power 1. What do you get?
Sir, please, you get 5,000.
All right, so you put a 5,000 in here. That's all. So the purchase consideration is 37. Now focus on other 2 questions that you should be expecting. My next question, I have to pick a question on share exchange with you and contingent consideration. There are only 4. Or exchange of assets. share exchange or exchange of assets. All right, then the workings number 2, you do what you call net assets of the subsidiary. So workings 3. Workings number 3, see net asset of Saracen, net assets. Mention the subsidiary's name. Saracen. Right here at what? Acquisition. At what? Reporting. Right here, post acquisition. So you see, we have not read the entire footnote and question, but I'm not worried because I'm actually solving the question. Let me ask you scenario. You reading the entire thing without solving, and somebody also solving the question without reading all. Which one do you think is far better?
Say,
This
please
is
solving
better.
without reading or.
Yeah, so the little you've read, do something for us. Even if it's one footnote you have read, do something. For all you know, what you've done is correct. And it will fetch mark for you. Go and report on all the equity item of the subsidiary. So come here. What are the equity item of a subsidiary? So 10,000, 12,000, 6,000. So write it as it is, as I've seen it here now. Equity shares, 10,000. It's at reporting. I've written all workings are in 3 zeros already, so it's okay. What you have to do is that the retain, and when you reach there, this is the open balance and this is the profit made for the year. So put the two together, 12,000 plus 6,000, what do you get?
18,000.
Good. So you get 18,000. So call it retained earnings. That's all. Then you now go and look for these figures at acquisition. For equity shares, we assume that after acquisition, there has not been any share issuance. So therefore to be the same. But here, check. What is the date of acquisition? 1st October. That is the exact beginning of the year. So here, when the examiner arranged the question this way, this is the profit made for the year. And this is the first retained earnings at 1st October 2010. So in that case, the one at 1st October is the retained earnings as at the beginning of the year. That's 12,000. So you put 12,000 here. Then the profit made for the year. Always post-acquisition means at reporting minus at acquisition. 18 minus 12 will give us what?
6,000.
So you see, this is what I expect you to do first. Then here you go and take your time and read the question. 11 2 things per you are done. 11 1. fair value adjustment. So let's go and read to look for fair value adjustments. Whether fair value needs to be adjusted. So let's go to the footnotes. If you follow this, you finish the question within some few minutes. Here we are now with all these things here. Paladin policy is to value non-controlling interest at fair value at the date of acquisition. For this purpose, the directors, that's note 1. The directors of Paladin consider the share price of Saracen of 3 CD50 pesos. If the examiner gives you the share price of the subsidiary, it means that is what we use to value the NCI. That is what we are going to use to value the NCI. If the examiner gives you the share price of the parent, if parent share price of the parent is given, that means the share for share, the share exchange in the question. That's all. So here is for NCI. Look at note 2. It says at the date of acquisition, the fair values of Saracen property, plant, and equipment, PPE, was equal to the carrying amount, with the exception of Saracen plant, which had a fair value of 4 million above its carrying amount. Is it gain or loss? Above the carrying amount. Above, that would be a fair value gain, right? So come here and put in again. Write a fair value adjustment. Like this, right plant. Write a 4 million here. That would be 4,000. Now, anytime they give you fair value adjustments, when the examiner is silent afterwards, please place it at reporting as well. Place it at the reporting. Unless the examiner stated clearly that it has been recorded in a financial statement. Anything, record it at here again. It means it has not been captured. And here will be dash. Please, any figure that you carry from the footnote at the report and place it at reporting here, automatically it should reflect on the face of the balance sheet. So let's go to the face of the financial position. It's again, add it to your PPE. So go and add it to PPE. Don't say when you're done, you do it. No, do it now. Go to PPE, say plus 4,000. Then you continue reading. You see, the note is even with the same note too. No, I'm not done reading, but the sentences I've read, I've worked on it. Now the last sentence says that at that date, the plant had a remaining life of 4 years. Saracen uses straight line depreciation for plant, assuming there's a nil residual value. 4 years. So you calculate what you call, it will create additional depreciation. So go back to the net assets. A third examiner, additional depreciation. Open a bracket. The 4,000 given to you, all divided by 4 years, times the period of consolidation. Please, for balance sheet here, multiply by the period of consolidation. What is the period of consolidation? What is the period of consolidation? 1 year, right?
Yes, please.
It was 1 year.
If it is 6 months, 6/12, don't forget this. Even if it is 2 years, multiply by 2. If it's 3 years, multiply by 3. What if we acquired a subsidiary so many years ago? Multiply it by so many years ago. So that is that. I'm done. So don't put it at acquisition, put it at reporting. That will be 1,000. Negative. What should I put at the post here? 1,000 minus 0. It will be negative 1,000 here. Go still. Anything you place at reporting, go to the face of the balance sheet. I'm going to do that again. So come here and say minus 1,000. Then you move on. So we are done with this note entirely. It will not go anywhere again. So in that case, under a typical exam setting, use your pencil to do like this. From here to here, I'm done fully, entirely. Also, at the date of acquisition, Paladin value Saracen's customer relationships as a customer-based intangible asset at a fair value of 3 million. Saracen has not accounted for this asset. The trading relationship of Saracen customers last on average 6 years. So here to create an additional intangible asset. So it's an intangible asset, which will increase the net assets. And the amount is what? 3 million. So go and add 3 million to the intangible. So go to the net asset. It's of Saracen. So right here, intangible assets. Intangible assets. Into bracket what? Customer list. Customer list. It's an intangible asset. And it's 3 million. So 3,000 here. 3,000 here to dash. Go to the base of the balance sheet and add those 3,000 there too. But this around, add it to intangible assets. So plus 3,000. Alternatively, you can wait and find a current account. So that is all. I'm done with this note entirely. Left with the last sentence, then we are done entirely. He said that Saracen has not accounted for this. Trading relationship with the Saracen customer lasts on average 6 years. So you have to calculate amortization. What is so right here? Amortization. Open the brackets. The customer list of 3,000 over 6 years.
Sir,
Times 1 year.
hello, sir.
Yes, please.
So say the amortization, if you forget it, you write depreciation, will you be penalized?
Once the figure is correct, we understand.
Oh, okay.
Yes, we understand.
Okay, thank you.
Great. Normally, the worst, we are not too much concerned when it comes to calculation reporting. Our focus is on the figures more. So, but if you remember the right figure, don't push us to the wall if you know the right thing. Okay, so here we dash 3,000 divided by 6 years times 1 year. What do you get? Please, what do you get?
Sir, 500.
All right. So
Your screen is down. What you are writing, you can't see it well.
Sir, the black thing is covering the screen.
okay, so let me do this. So is it okay now?
Yes.
No, go up. It's okay.
The same thing should be here, 500 negative. Again, go to the face of the balance sheet. Go to the face of the balance sheet. And intangible asset, subtract 500 from it. That's all. So that is how you solve them. Don't say that when you are done, you do the posting. Yeah. You finish the examiner, the invigilator will say, get ready to stop work. You have not done that. And that'll be very hectic. So on that note, we can say that Vimily, we are done with the note 2 entirely. Then I'll go to note 3. Here, look for something that the note that it mentions Saracen's name in it. So if you read a note, they've not mentioned Saracen's name in that note. Don't bother yourself to read it. Move on. So note 3, do you see Saracen's name in it? In note 3, have they mentioned his name there?
Yes, please.
So that means anywhere they mention his name, there's a likelihood that it will affect his net asset or her net assets. So let's say at 30th September 2011, that's at the reporting date, Saracen's inventory include goods bought from Paladin at a cost to Saladin. Please, when they say at a cost to the buyer, it's the same as selling price. Don't let them confuse you. Saracen is the buyer. So cost to the buyer is the same as selling price. Of 2.6 million, Paladin had had a markup. Sorry, Paladin had markup these goods by 30% on cost. So don't say that, oh, because this one they say it's cost. So I just take 30% of 2.6. No. This is the selling price. Because it's the cost to the buyer. The one who is buying, he will buy it at selling price. Or the one who is selling, it will never be the cost to the one who is selling. No. So it is a very confusing statement we normally do to just shift students' attention. So 2.6. So here find the unrealized profit. Now, unrealized profit, if I've watched our video on intra-group adjustments, how do we eliminate it? It's very simple. Number 1, when you are doing balance sheets. Unrealized profit. Number one, look for the one who made a sale. Subtract it from the seller's profit. Number two, subtract it from the group inventory. So here, who made a sale? Who made a sale?
Paladin.
You all agree that it's Paladin that made the sale? Because Saracen bought from where?
Paladin.
Good. So that is that. So if it's Paladin, then it will affect Paladin's profit. So it will not affect Saracen's profit. Hence, this will not affect. It will only affect the parents. So when you're reading, when you go to the parent side, we'll calculate it and it will affect the parent, not the subsidiary. Because the subsidiary is not the seller. It only affects Saracen if she is the seller selling to Paladin. Now let's go to the next one. Say Paladin, no, not this one. Paladin's agreed current account balance owed by Saracen at the 30th September is what? 1.3. When you say current account, this amount we owe to each other. Subtract from both receivable and payable. So go to receivable and payable and take it from there. 1.3 receivable is here minus 1,003. Go to payable minus 1,003. That's all. So you see, this is how you answer the question. So here we have done half of note 3. Let's go to note 4. Impairment test was carried out on 30th September 2011. Concluded that consolidated goodwill was not impaired. But due to disappointing earnings, the value of investment of Augusta was impaired by 2.5. So that means we need to look at that one. Wow, they just dropped a question in mine. So check on your page. I'll drop just a question there as well. Look through. That's your trial work. Now, so here this impairment that will affect Augusta. So that's investment in associates. Assume that all profit accrue evenly. It's because of Augusta, that's why the examiner make this note. So that we can take 8 months out of 12. That's the meaning. So now we are now reading the footnote. To close the account of the net asset, that's all. Nothing else will affect it. Let's go and close the account of the net assets. Start the totaling for me. I need at acquisition, at reporting, and I need post acquisition. Please, one question can never contain all the consolidation principles. So as and when you solve a lot of questions, you'll be exposed to all the consolidation principles.
At acquisition is 27,000.
Acquisition 27. At reporting.
Sir, 33,500.
Post
Hello,
acquisition.
sir.
Yes, boss.
At acquisition, please, is it 3,000 for the intangible assets?
Yes, please. It's 3,000. It looked like 30,000, right?
10, 29. And I said 29. 29,000.
A 29. The same question,
10, 12, 20.
the same figures, different
Yeah,
answers.
29,000.
That's the power of examination.
Sir, the
Yeah.
post acquisition is 4,500.
4,005.
500.
All right. So next workings 3. We are done. Let's go to workings 4. Goodwill. Your workings number 4 should be goodwill automatic. This goodwill is at fair value. So say consideration paid or cost of consideration. Cost of consideration. The cost of consideration is workings 2. We have 37. Add fair value of NCI to it. Fair value of NCI at reporting. They didn't give it to us. They said we should use the number of shares. So go to the question. Another smart way that they will not give you the NCI figure is that they will give you the share price of the subsidiary. Now, if parent, the entire shares of the subsidiary is 10,000 and parent have acquired 8,000 out of the 10, NCI will have how many shares?
Sir, please, NCI will have 2,000 shares.
So multiply the 2,000 by the share price of the subsidiary at the date of acquisition.
Okay.
So that would be into bracket 2,000. How do you get the 2,000? It was 10,000 minus what?
8,000.
Times 3.5. What do you get? 2,000 times 3.5.
7,000.
Add everything together. What do you get?
Sir, please, I can't see the top. 44,000. 44,000.
It has a name. It is not by force for you to write a name. We call it total consideration. Total consideration. The less net asset at acquisition. Which is 29, right? What's the net asset at acquisition? 29,000.
Yes, please.
All right, so what do you get as your goodwill?
You get 15,000.
That is a goodwill. At acquisition. There's no impairment. If there's impairment, you bring dash. They now get goodwill at report. goodwill hardware report. I'm done. So go in there and go and place your goodwill, please. In event where you get a negative goodwill, it is possible for you to get a negative goodwill. In that case, what you have to do is that the standard say recalculate it again and be sure that it's negative goodwill. If you are sure about the negative goodwill, don't send it to the non-current asset as negative. Instead, add it to the group retained earnings. So negative goodwill is a gain. We call it bargaining gain of the parent. It must be added to group retained earnings. So let's go and add our goodwill 15,000. Working for goodwill 15,000. Next, do the NCI. Workings number 5 should be NCI. NCI at reporting. Pick fair value of NCI at acquisition. Fair value of NCI at acquisition.
Sir, please, the 7,000.
So we put the 7,000 in here. Then when you are through, you bring your share of
post-acquisition movement.
post-acquisition changes. Open a bracket 20% times 4,500. What do you get? You get 900, right?
Yes.
Good. So you get 900. So therefore, NCI figure will be what? $7,009. So let me go and place it in. Rectify 7,009. That is not difficult to. But I'll give you one complicated question for you to go and do it. It will take you about some 2 to 3 hours before you be able to break it down for us. NCI is here. This is NCI. Write it here, 7,900. The next working, if there's associates, do associates. If there's no associate, before you go to group retained earnings, let me just last but one workings, then we are good to go. Let's do associate working 6. Call it investment in associate. Investment in associate. First, write consideration page. Call it cost of consideration. Please, this is what you call equity accounting method. This is, I'm expecting the examiner to ask you the definition of equity accounting method and how it should be done, because currently the ISB, they are revising the definition and the process of obtaining or accounting for associates using equity accounting method. So currently speaking to you, equity accounting method is in the revision. They are revising it. So please, for this trip, if you don't get calculation like this, you will get theory on associates. So know everything about it. Oh yeah. So cost of consideration parent pay. I have a very one dangerous question for you. Wherever we solve that question, we are good to go. How much the parent pay? Here is it. On 1st February 2000, Paladin also acquired 25% equity shares of Augusta, paying 10 million cash. The consideration paid was 10. Then you add share of post-acquisition changes in net assets. So that is what you have to do for us. Let's go and calculate the post-acquisition changes. What is the profit made by Augusta? Augusta profit is what? 1,200. Take 8 months of it because we acquire Augusta for 8 months. Then you take Paladin's share. Paladin 025. So the same 1,002. So 1,200. We are taking 8/12. Then finally we take 25% of it. So what do you get?
Say
Come again.
200.
Great. So right here 200. Again, there's impairments of assets. So let's go and check the impairments. That's no 2 or so. Here's it. They say Augusta was impaired by what? 2005. Write everything full. Impairment 2,500. You subtract. What do you get? It ends there.
$7,700.
Straight to the financial position. 7,700. Workings number 6. 7,700. Then the last working for the day, then we are done. I always do that workings last. Group retained earnings. Number 7. group retained earnings. First, I have to write Paladin here. Out here, Saracen and Augusta. I have to take everything of Paladin. What Paladin's retained earnings? Add the two figures together, 25,700 plus 9,002. Those two figures.
That's 7,700.
Can it come again?
37,700.
I will not agree with 25,700 plus 9,002.
Oh, sorry.
That should give us 34,900, right?
Yeah.
34,900. Saracen, you take 80% of the post-acquisition changes in net asset, which is 4,005. What do you get? Augusta, you take 1,002 times 8/12 times.
First one is 3,600.
Come again.
Saracen is 3,600.
Then Augusta.
200.
Here, impairment.
Mm-hmm.
2005, put in brackets. There are a lot of things that will affect the parents. But there was a particular note we read. It said it will affect the parents. The unrealized profit. So let's read unrealized profit. So now, who made the sale? It is Paladin. How do you calculate unrealized profit? It is a profit loading times the proportion of goods left in inventory. So the profit loading is 30% on cost markup. But the goods left in inventory is what? 2.6 selling price, not cost. So you have to convert the markup to margin by saying 30 over 130 times the 2,006. That is unrealized profit, which should be eliminated. So unrealized profits made by Paladin. So that would be 2,600 times 30 over 130. This is what you get?
$600, say.
It's a cost, so you put in brackets. The same figure should be subtracted from the inventory. So go to your inventory. You see one funny thing about this, when you do one and you say you want to finish the entire program before you do the posting, you finish and you've not posted anything. As and when you do, you post. Inventory minus 600. Again, we are still heading on. There's a particular side we read. I think we've done everything. Left with one bill. I love it this side. The or one of a discount. Anytime there's what you call deferred consideration, you must find a provision on the discount. It's a finance cost. So it will go against the parent profit. So you can call it unwinding of discounts. Unwinding of discounts. Please, if you think you will not remember unwinding of a discount, just call it increase in provision for deferred consideration. Open your brackets. Just pick the cost of capital, which is 8%, multiplied by the consideration at the date of acquisition. So go back. Obviously, you find the present value. Just multiply by this. That's all. So multiply this figure by the present value. So the cost of capital on one of these is equal to 8% times 5,000. Normally, I calculate it right after the cost of consideration. What do you get? You get 400. Put it inside bracket again. Put it in brackets again. Now, the total figure goes to current liability as owing. You see, now what will be the total? You get 400. Add it back. The one of the discounts, add it to the present value of the consideration. That will become the liability at the end of the period. So go to your current liability and create a column and call it deferred consideration. The bracket of 5,000 plus the 400. You get 5,400. On that note, we are done with this question. Let's just balance it and go. So now start from the top, add everything. Now add everything, balance it off. Let's go. So slowly, I'm on PP now. 40 plus 31 plus 4 minus 1 minus 1,000. So that will be 71. That will be 70. So that will be 66,000. 2005. That should be 10,000 if I'm not lying.
Hey, please, the PP is supposed to be 74,000.
74,000. Okay.
Yes, please. 40 plus 31 plus 4 minus 100 minus 1.
Okay, so 74,000. I agree. Is the intangible asset correct? All right, so
Yes, correct.
add all of them together. 15,000, 7,700 plus 74 plus 10. Answer.
106,700.
106,000.
700.
700.
Do not underline it again. Now let's go. Inventory. 11,200 plus 8,400 minus 600. Answer. Is that 19,000?
19,000, say.
Okay, let's go to trade receivable. 7,400 plus 5,300 minus 1,003. So this cancel this. This one 11,400.
11,400.
11,400. Good. Then
Sir,
bank.
please. 3,400.
So you close it and shift it here. The examiner will understand. Put all together as total asset. You double one line. Now you are adding from the total non-current asset of 106,700 down to current asset. You beg.
Sir, 140,500.
140,500. Let's go. You double analyze whether it's balanced or not. Equity shares. Equity shares, close it and bring it to 50,000. Group retained earnings was the workings number 7. What do we get? We not even close it to. Please close it for me. What do you get? Group retained earnings. Group retained earnings. Group retained earnings.
Sir, please, I'm coming.
Group retained earnings. 34,900.
Sir, please, 35,200.
35,000. Hey,
200.
are you sure? But this and this. President, do you agree that it's 35,200? Okay, so 35,200. Let's go and place in the account. So this question is just open up the flow. Add them together first for me. You get 85,000.
5,200.
Please add the equity first before adding the NCI to it. Agreed.
Yes, please.
If you don't do that, then you say, oh, by the end of the day, we are adding everything together. So let me just add equity, the NCI to equity will mark you down. We will mark you down intentionally. So what's the total?
91,300.
91,300. Deferred tax, there's no information. So what do you get? 23, right?
Yes, please.
Bank,
2,500.
trade payable. Okay, so here 11, 10. So that would be 16.
Sir, please, 16,500.
Okay. Then we are done. Let's see what they did so that we follow the same suit. Yeah, after getting this, they added everything together. So one logo line, let's go. Add from here 91,300 plus 23, everything together. From there, I'll give you your difficult question. Solve it now. Don't sleep. You have a class test. I'm going to give you a class test right away.
Sir, please, you get 138,700. Sir,
No, add again. No. I'm not agree. Oh. You are adding
sir, please.
91,300 plus 20.
Yes, sir, I've done it. Plus 23,000. Plus 2,500.
Uh-huh.
Plus 1,000.
Why 1,000?
16500.
Welcome.
Uh-huh. Plus 5,400. What do you get?
Plus 5,400. So when I do it, I get 1,300 and 138,700.
I still not agree.
Yeah, I have
Really?
111,900.
Hey, I still
Eh.
not agree. We are adding 1. Let me go back here. Yeah, it is something I don't understand. 85,200 plus 7,900. What do you get? Let me confirm that one first.
So 85 what?
85,200 plus 7,900.
That is 93,100.
93,100.
Then we wrote 90.
To 1.
I wrote 91.
Now add again for me. But this is an introductory question. You just boost your morale.
So 140,500.
Okay, so it has really balanced. This question, there's nothing inside. Don't even worry yourself.
Pardon?
There's nothing in this question. It has really balanced for us. Exam, don't be focused on the balance, But we'll intentionally bring a note that the step. So now let me give you this challenging one as your more question right now. As soon as you are done, send the answer to me. If you are not done, don't sleep. I'll discuss with you because the complexity of it, because of how complex it is. I'll first discuss with you, ask all your questions, and I'll give you time. Only 45 minutes or 30 minutes, you sit and work. Present, send the answer to me right away. I'll do that twice of the question. One of them is your exam question. But as to which one, I can't tell. I'm doing
So between this one and the one that you'll be giving us.
no, the one you're going to solve, and I'll do twice. I'll do like 2 times. One is your exam.
Okay.
This
So
one,
we should concentrate on this.
this one is yes and no, but you understand this.
Yes.
So there's nothing inside. This one we are using to build understanding.
I wish this came in our exams.
No. I also don't wait for this. I wish for something complicated. So that the more entries you make, You are getting it. All right, so let me go straight to the question of the day. Question of the day. I have some drop questions with you. This question. The way this question has make noise in town. Check the year that this question was released. When was that?
November 2019.
But it sounds much more powerful than. For the first time we released this question was November 2018. So I'll send this question to you. I think this question came for the part 3. The theory one came for part 3. Yeah, it came for part 3, last 2 sitting. This one. This one. So let me send this one to you. Target, Agrobeso, and Easy. Please, I need answer right now. You only have 30 minutes. I need the answer right now. This one is a full loaded question. So take your time and work on it. If you see any difficult, let me send it to you. And I'll give you 5 minutes to ask all your questions. If there are no questions, then in the next few minutes, I take my answer. Okay, so let me share this with you, the mock. You should have it. You should have it on the page now. This is 2019 November, but it's still making difference. It sounds like it is so fresh. It contains one of the is it challenging question? Or very tough one. All right, so I've shared it on your pages. Try your hands on them. You only have 30 minutes to send your work.
The 30 minutes is too close. We have to go and drink water soon.
Come again.
And then let's do it 45 minutes. 30 minutes, you drink water soon.
Okay, so 45 minutes, meaning I'll meet you again to solve it too. I'll meet you again to solve it. Target and Agrobeso. If I do one, you also do one.
Say.
So now you have received it, so you have to start working on it now.
Okay, sir.
So Target, Agrobeso, and Easy.
My pencil. Pencil, yeah,
So on that note, I'm done consolidation. When I come back, I'll bring your second question. Then you don't need to worry about console again. Another time we'll meet and then we handle your final account. I've also shared your ratio with you. Yes, boss.
In my FMO and ME.
No, voila. We did top. All right, so your ratio questions they in here. That one also you try your hands on it. And we are good to go. All right, so let me leave you for you to concentrate and work on exactly 45. So what time now? So exactly 8.
Let me say yes. We
Exactly.
come back around.
So 9, we are coming back to face the remaining ones. So see you at 9. Let me go and save my whiteboard. Go through it